The Big Short. The man who saw the crash coming, bet against America, made billions and walked away clean. While the world burned, they cashed in. And the wildest part? The system that broke never really fixed itself. It just got a new coat of paint, bigger bonuses, and a license to do it all over again. Suburban California 2000. Michael Burry isn't your typical Wall Street shark. He's a lanky, awkward genius with Asperger's, a glass eye from a childhood infection, and a brain wired for patterns. Trained as a neurologist, yeah, the guy who could map your brain better than most, Burry traded it all for numbers. Why? People disappoint. Data doesn't. He starts a blog, burrynotes.blogspot.com, tearing apart overvalued tech stocks during the dot-com bust. Makes a killing shorting them. Word spreads, investors knock. In 2000, he launches Scion Capital, a one-man hedge fund in a strip mall office, surrounded by empty pizza boxes and Excel sheets that never sleep. Fast forward to 2005. Housing's the new god. Everyone's flipping condos, refinancing McMansions, pulling equity like it's free money. Banks are lending to anyone with a pulse, or without. No-doc loans, interest-only ARMs, teaser rates that jack up after 2 years. Burry's not buying the hype. He's knee-deep in prospectuses, mortgage filings, prepayment data. What he finds chills him. Subprime loans exploding. Borrowers with FICO scores in the 500s, no income verification, stacking debt like Jenga. Banks slice these turds into mortgage-backed securities, MBS, tranches of risk, the safe AAA slices on top, the toxic equity on bottom. Ratings agencies, Moody's, S&P, stamp it all gold because, hey, they're paid by the banks issuing the bonds. Burry calls Goldman Sachs. I want to buy credit default swaps on subprime MBS. The trader laughs. On the AAA tranches? You're betting against the safest stuff out there? Burry doesn't flinch. Exactly. CDS are like fire insurance on a house you think is wired wrong. If the bonds default, the seller pays Burry the face value. Premiums are cheap, 0.25% a year, because no one believes housing can crash. Burry loads up, $60 million, then $750 million, then over $1 billion. His investors? Panicking. Housing's up 20% a year. You're killing us. Letters flood in. Redemptions spike. Burry locks the fund. Trust the math. He rocks in his chair, earbuds blasting metal, staring at screens that whisper the end. New York, same year. Jared Vennett, real name Greg Lipman, but we'll call him Vennett like the movie, slicks back his hair at Deutsche Bank. He's a bond salesman with a poker face and a nose for arbitrage. Hears about Burry's trade from a swap desk, digs in, sees the same rot. 80% of new mortgages are subprime or Alt-A, defaults lurking like termites. Vennett's desk is long housing. They're making bank underwriting MBS. So he flips the script, starts hawking CDS to hedge funds, pension plans, anyone dumb enough to listen. This is the Big Short, bet against the American dream. Most hang up, but one bites. Mark Baum. Baum's in a midtown high-rise, Front Point Partners, ex-hedge fund hotshot, chain-smoking, foul-mouthed. Brother Porter jumped from a window in '02. Wall Street burnout. Baum's got a chip the size of Lehman on his shoulder. Hates the greed, the lies, the suits who golf while the little guy drowns. Vennett cold calls. Mark, imagine a CDO squared. Bundles of bad mortgages resold as AAA fairy dust. It's all gonna melt. Baum snorts. Bullshit. Housing never crashes. But he listens. Flies his team, Porter, no relation, Danny Moses, and Chester Zoltan Alvarez to Boca Raton. They crash a mortgage broker expo. Strippers handing out flyers, brokers bragging. We approve in 30 seconds. No income? No problem. Ninja loans. No income, no job, no assets. They tour neighborhoods, half-built McMansions, weeds choking driveways. Visit a strip club where brokers recruit originators. One admits, we get bonuses for the riskiest shit. Higher yield, fatter commissions. Back at the hotel, Baum slams the table. This isn't investing, it's a goddamn Ponzi scheme. He buys $1 billion in CDS. His team shorts everything. MBS, home builders, even strippers' real estate LLCs. But doubt gnaws. If we're right, people lose homes, jobs, everything. Baum shrugs, lights another smoke. The system's already fucked them. We're just collecting the bill. Meanwhile, in a Menlo Park garage that smells like ramen and regret, Charlie Geller and Jamie Shipley, mid-20s, best friends since camp, self-taught traders, bootstrapped brownfield fund with $110,000 from a lawsuit win. They're scrappy, Charlie's the optimist, Jamie the bulldog, but small fish. No big bank access, no ISDA agreement to trade derivatives. They're flipping Vegas real estate, killing it when they stumble on Vanette's infamous prospectus, a glossy pitch deck leaked from Deutsche. The end is nigh, short subprime. They pore over it. Holy shit, this is real? Numbers check out. But they can't buy CDS. Desperate, they track down Ben Rickert, retired big leaguer, Morgan Stanley vet, lives in a solar-powered hobbit hole in the Ozarks, grows his own kale, avoids the grid like the plague. Wall Street's a casino. I cashed out. Charlie and Jamie beg. Ben, you're the only one who'll get it. He grills them, traces the data, models the defaults. You're right, but if housing collapses, it's not just money, it's riots, suicides. The whole illusion shatters. He signs on, pulls strings for the ISDA. They start small, $30 million in swaps on the safest AA tranches. Everyone mocks. You're shorting Fort Knox? As premiums tick up, 0.35%, 0.50%, their account bleeds. Jamie paces. We're underwater. What if we're wrong? Charlie grins. Then we lose everything and flip burgers. Then warns. Winning means the world ending. You ready for that? The party's raging. Banks invent CDOs, collateralized debt obligations. Not just bundles of mortgages, but bundles of MBS bundles. Risk sliced so thin, it's invisible. Then synthetics, no real loans needed, just bets on other bets. Goldman, Merrill, Citi, crank them out. $2 trillion market, bigger than GDP. Rating shops rubber stamp, 80% AAA. Why? Fees, $200 million a pop. Explain it? Say your buddy bets on the Jets. You bet against him. Now a bookie lets you bet on my bet against his bet. Infinite leverage, zero skin. Regulators? Asleep. Greenspan preaches housing fundamentals are sound. Burry's premiums hit 1.2%. Scion's down 19%. Investors revolt. You're a lunatic. He emails, the reset wave hits in 2007. Trust me. Rocks harder, blasts Slayer louder. Baum's crew hits Vegas for the American Securitization Forum. Not the fun Vegas. Seminars on innovative tranching. They corner a Deutsch trader. How's the subprime looking? He smirks. Bulletproof. Baum presses a ratings analyst in the lobby. You rate this crap AAA? Ever seen a default? She fidgets. Models say no, and we're independent. Baum explodes. Independent my ass. You're whores. Back in NY, they double down. Short Bear Stearns. Short Countrywide. Watch Florida foreclosures spike on CNBC. It's starting. Charlie and Jamie drag Ben to London, pitch the story to a Financial Times reporter over pints. This is fraud on a biblical scale.
trillions in vapor. The guy nods, then kills it. Banks are our biggest advertisers. Can't burn that bridge. Ben sighs, welcome to the club. Truth's the first casualty. They fly economy, swaps ticking like a bomb.
Early 2007, the first crack appears. Subprime giant New Century Financial collapses, but Wall Street pretends everything is fine. Then the dominoes fall. 2008, Bear Stearns collapses. Months later, Lehman Brothers files the biggest bankruptcy in history. The system freezes. Governments rush to save the banks with the Troubled Asset Relief Program. Meanwhile, 10 million Americans lose their homes. And the investors who bet against the system, they make billions. The crisis ends. But the system, it never really changed.